all my indications are, okay, volatility is very low. The stuff I see, it's honing in commodities. Like I said, I have to use the word frightening on Halloween. This has never happened. You've just never seen gold go up this and crude oil going down this much. And then, so to me, that's the macro. And but the good news is, I still think, okay, so Bitcoin's below its 100-day, its 200-day moving average. We all know 100,000 is a good support. I fully expect we're going to get a chance to buy Bitcoin in 5 figures this year. I still fully chance we're going to get a chance to sell VIX above 20. They already had that already, and Bitcoin's still kind of, maybe it's the leading indicator. So here, okay, so we get to 100 grand. It's still, pretty significant level, still a significant asset, but it's all the other ones I'm worried about.
As global markets wobble between recovery and uncertainty, Bitcoin stands at a critical crossroads. And Bloomberg's Mike McGlone believes the next big move may depend on gold's shine fading. Bitcoin currently trades at $106,580.40, yet Mike McGlone warns that market sentiment is shifting toward cautious optimism rather than outright euphoria. As global trade uncertainties fade and monetary easing begins to filter through the economy, early signs of improvement are emerging in ISM manufacturing and services data. However, McGlone notes that unemployment could rise to around 4.35%, reflecting a still fragile recovery. While equity markets remain resilient on strong earnings, he cautions that deep structural imbalances persist, particularly the record divergence between gold's 53% surge and industrial commodities decline, the widest gap since 2008. McGlone's attention is drawn to the Bitcoin-to-gold ratio, which he fears may break below its key 25x support, suggesting waning momentum for Bitcoin in the near term. He views gold as overbought near $4,000, hinting that a rotation back toward Bitcoin could emerge once the precious metal stabilizes. Historically, when gold pauses, Bitcoin often leads the next move higher, a dynamic experts say may soon reassert itself. Despite short-term volatility and a fragile macro backdrop, McGlone maintains that Bitcoin's long-term trajectory remains intact as fundamentals evolve in its favor. As Bitcoin navigates this pivotal phase, do you think gold's pause could spark its next rally? Share your thoughts in the comments below. And don't forget to like, share, and subscribe for more market insights.
It was kind of neutral more from Anna today. She pointed out some key things, that there's the maximum drag from trade uncertainties entering the rear view mirror this quarter. Easing of monetary policy should be transmitted to the ISM and kicking in a little bit. So my sense from her was getting a little bit bullish on the economy without directly saying it. Showed that unemployment likely is picking up to around 4.35% in October, if we could do the data, which we can't, but that's her estimate. And she's non-farm payroll is probably running around 50,000. So unemployment somewhat weaker. She shows isms are coming out, and manufacturing to show slight improvement, and services to show improvement. So kind of neutral to upside there. Our equity strategist, Chris Kane, came in and pointed to stock markets doing just fine. As we know, the uptick's firmly intact. The RSI is only 61. It's not overbought. 40% of S&P stocks are above the 50-day moving average. That's a problem. Only 40%. Earnings are very, very strong so far. 70% reporting, running 13%. That's quite strong. Broad-based earnings and sales strength. Only energy and stables are not doing well with earnings, and they're because they're basically flat. And the beat rates are well exceeding pandemic expectations. Erica Eidelberg reiterated what Ira's been saying. She came in for interest rates today, pointing out near term less likely to see the bull steepening due to Fed chairman's pause. She thinks that he intentionally wanted to prepare the market for a skip rate cut meeting. 10-year rate yield to remain range bound, and Audrey Childe-Friedman our equities FX strategist didn't have too much to say. There's her not strong conviction on the dollar anymore. And then I just pointed out the increasing inordinate burden for the stock market to keep going up for things like industrial metals to stay elevated. They're up a little bit less than the stock market this year. Bloomberg Commodity Index, same thing, up a little bit less than the stock market this year. But it's the underpinnings that I find frightening, and that is gold leading everything, up 53%. Stock market and the world's most industrial commodity kind of leading the losers, down almost 15%. That disparity running almost 70% now is the greatest since 2008, which was and actually it's the greatest in history on an annual basis. And then I tilted over and just point out what I'm watching very closely is this Bitcoin to gold ratio. I'm fearful now that it might break below that 25x support. It hit there once, it bounced. Our model shows it's weaker, and then you just look at volatility in the stock market. It has to stay low. That thing usually tips lower. So watching that ratio closely. To me, gold's just way overbought here. It's not a, overweight longs here typically do not well at 4,000, but it's happy. And then I just point out finally, one thing that's really a good indication what's happening in commodities is what happened with the mighty soybean. U.S. soybeans just a couple months ago were at a 20% discount to not to Brazilian soybeans, which was just irrational for China not to buy them. But I think they did them just to kind of, dig to Mr. Trump. But now that they've come around to buying soybeans at a really cheap price, and everybody thinks it's a great deal, it was just rational. It was just well played on their part, is what I like to point out. Back to you. The catalyst you mentioned about the mainstream is clearly what's happening with banking and Bitcoin. Amen. Finally, we can go look back in history with Elizabeth Warren kind of in the same category as Aaron Burr, and thank her for that. Like, we needed a good antagonist, and in a good way. It's like, yeah, thanks. And Gary Gensler. But the key thing that's really shifted for me is the fundamentals have clearly changed. Now, it's delightful finally to see everybody get so bullish for October, because it always happens and it didn't happen. That's the key thing. That's hardest thing to do in markets at hedge funds, and you guys can do it well. It's the number one thing to do is defining when the answers have changed. The questions always remain the same. And that's clearly been my case in Bitcoin. I've been early. I've been wrong in many ways, but to me, the answers have changed now. Those questions I used to get from those banks you're talking about on the Bloomberg terminal 6 years ago, yeah, I was quite bullish. Now, the questions I get typically is what ETF I buy from retail. So also the fundamental shift really kicked in when the tide went out a little bit on the weekend of October 10th. And we saw that if you're buying cryptos now, you're not only one of the top beneficiaries is the Trump family, the Trump administration, and Trump administration officials. And you're dependent upon them. That's a complete shift from the past when I really liked the space in the Trump administration. One, hated it because we saw where it was going, is you're getting away from the system. Now I think that's the inherent on any rally, the insiders who've been in for so long say, yeah, this isn't what I bought into when I bought into it 10 years ago and I made my many X's.
As global markets edge toward a tipping point, Bitcoin stands at the heart of the storm, and Bloomberg's Mike McGlone warns the next move could define the late stage of this bull cycle. Bitcoin's struggle for direction continues as Mike McGlone, senior commodity strategist at Bloomberg Intelligence, warns that global markets are entering a critical late cycle phase marked by excessive optimism and diminishing returns. He cautions that the U.S. stock market's dependence on perpetual gains has created fragility, with even a minor 5% decline potentially triggering 10 to 20% corrections in cryptocurrencies and other risk assets. Despite the Federal Reserve's rate cuts since September, Treasury yields remain elevated, reflecting a loss of confidence in policy effectiveness and suggesting that inflation may stay stubbornly high. McGlone adds that the era of easy money appears to be ending, and the Bitcoin-to-gold ratio continues to weaken, underscoring fading momentum in digital assets. On the technical front, Bitcoin remains trapped between the 200-day moving average at $109,000 and the 100-day at $114,000, with both levels defining a crucial equilibrium zone. A decisive close above $116,000, McGlone notes, could ignite renewed bullish sentiment driven by improving liquidity conditions, potentially paving the way for a rally toward the $120,000 to $122,000 range. Until then, he urges caution as macro risks and low volatility hint at late-cycle vulnerability across markets. Let's get back to the interview.
And we're getting the pile. And this is classic peak bull market stuff. Classic. And it just how it plays out, it can last for a long time. So that's my point is now, we're at that stage now, I tilt everything over to the U.S. stock market absolutely has to go up. Because if it just drops 5%, all the stuff that we see linking, crude oil, copper's hanging in there, cryptos, will drop 10 or 20%. This is just could be a day. That's why we're getting to that time of year. It's just, I look at it as there's any time to be completely out of the market, even in gold, it's now. And I rarely have said that in my entire career. Sometimes you just say, thank you. Nice to get out and have had a great year being long gold. Got lucky. But what's left? Treasuries. And And here's a key thing: if yields keep going up, since the Fed started easing in September, that 10-year note is up about 5 or 6%, 5 or 6 basis points, despite the Fed cutting 50 basis points. That's a bad sign. It says, oh, by the way, Fed. Chairman kind of said it. You can't cut in that environment. You're wrong. The bond market's telling them they're wrong to be cutting here, and I think that's the problem. Until we get a little bit of reverse wealth effect, inflation's going to stay sticky. Cryptos are just getting started, I think, on that. I think that's an important place to piggyback on. Is I completely agree with you. There'll be massive pumping, just like there was in Japan for the last 30 years, and just like there is in China right now. But it almost always comes after a significant drawdown in risk assets, and that is the key thing I see. I've never been more frightful in the markets now. Just after what gold did this year, when it wasn't supposed to do, what crude oil is doing, and all the thing I've seen tilting over, and that it's just there's a certain time that you have to just stand back and say thank you for all those great years and get out. And I think that's one of those times, because I'm not calling for a crash, but severe reversion can be kicking in. The key thing to remember, though, is we're already finding pretty significant diminishing returns from Fed easing. The Fed started easing in September. Inflation's going up. Stock markets, Bitcoin's actually showing major diminishing returns of that. Certainly from a risk asset point, Bitcoin to gold ratio is dropping a lot since they started. So I'm seeing that we're fine. We all knew we'd get to the end game, but let's also remember, as far as the lesson I learned is, yes, I get it. I see what you're right about the Fed, but what if politicians learn? It's a great way to ruin your chances of reelection is letting inflation get out of hand. And that to me is the big shift. That's what's changed. And now, since I've been trading starting in 1988, is we've been able to cut rates every time and not get inflation. But now we're getting that. Yeah. And the game's over. And that's why I think cryptos have to have the drawdown should be there first. We all agree there's a lot of bogus coins out there should drop 99%, and then we'll reset. I'm just the question is the same. I'm just trying to predict forward what's this happening, and I'd seen happening now. If let's put it this way, let's say, okay, we're up 20%, third year in a row in the S&P 500. I mean, it feels like kind of late stages 1929. Just imagine if we end up only 10% this year. Now that is the average for the last since 2000. How's that going to feel as we get to the end of the year? I look at the macro, I see what's happening is, I don't remember the last time we came in on a day like this and Bitcoin decisively dropped below the 200-day moving average. Now, we saw MicroStrategy do that a few months ago. And it's that time of year that I look at it as, okay, well, it's been a great year. And Dave pointed out there was just a lot of silly stuff in markets, people pumping their bags and everything. And now we're towards the end. I look at that Bloomberg Galaxy Crypto Index. It has like 5% left of gains on the year, and actually 4% if you factor in what's happening with some of the other markets. And it was up 30% for a while. And my thought is the risks are we hitting stops, and cryptos are starting to do it. And remember, what was the inflection point? Sometimes everything changes on one day. It was October 10th. 3% down in the stock market. Okay, no big deal. That stuff used to happen one day. Then what happened that weekend? We all saw the flush. I think that shifted the mentality. I think everybody realized, okay, my overweight long bot is probably got a problem. And now we have to have something to shift it back the other way. But it's not the time of the year for do that. You see the iteration I'm worried about here is if we just continue on this path this time of year, it typically will accelerate into the new year versus what happened last year. We're on an uptrend and that accelerated. I'm just worried about the lose-lose. And then all my indications are, okay, volatility is very low. The stuff I see it's honing in commodities. Like I said, I have to use the word frightening on Halloween. This has never happened. You've just never seen gold go up this and crude oil going down this much. And then, so to me, that's the macro. And but the good news is, I still think it. Okay, so Bitcoin's below its 100-day, its 200-day moving average. We all know 100,000 is a good support. I fully expect we're going to get a chance to buy Bitcoin in 5 figures this year. I still fully chance we're going to get a chance to sell VIX above 20. Now, we already had that already, and Bitcoin's still kind of, maybe it's the leading indicator. So here, okay, so we get to 100 grand. It's still, pretty significant level, still a significant asset, but it's all the other ones I'm worried about.
Bitcoin's recent price behavior reflects a market testing its resilience amid tightening macro conditions. The short-term holder, Fesich, realized profit and loss ratio plunging to -1.4 signals capitulation among newer investors, a pattern last seen during the April 2025 correction phase. Historically, such deep negative readings have preceded periods of accumulation and market stabilization, while macro pressures, rising yields, sticky inflation, and waning liquidity continue to weigh on sentiment. on-chain metrics suggest that downside momentum may be nearing exhaustion. Sustained support above $109,000 and a breakout beyond $116,000 could confirm renewed strength, aligning with Bitcoin's tendency to recover strongly after volatility compressions. The current setup points to a transitional phase, where weak hands exit and long-term holders quietly reaccumulate. Do you think Bitcoin's current correction is setting the stage for its next big rally? Share your thoughts in the comments, and don't forget to like, share, and subscribe for more in-depth crypto market insights.